Hey everybody, we're back. I brought a couple of real estate geeks here with me today. We got Ken Neate, our favorite mortgage lender, and Heather Roda, my big sister.
His favorite big sister.
Real estate broker, and of course Colin Broadwater, your favorite real estate agent in SLO County. We figured it's been long enough that we need to bring you another market update. We've been doing these a little bit less frequently. We used to do these monthly, but then it kind of seemed like things were flattening out enough that we're going to be a little bit less frequent, but things have been kind of happening. There's been a lot of stuff in the news regarding the economy and with real estate as well. So we're going to bring you up to date on everything that's been happening. Try anyway. I don't know if we'll get everything, but
We'll
do our best.
Ready, set, go.
we're going to start with Ken here. He's going to give us kind of the the usual mortgage data and rate update. Then we'll hop over to Heather here, and she is going to give us stats and data for SLO County recent sales, things like that. And then at the end, we're going to dive into some details about some products that Ken has. Specifically a buy before sell program. So it still is pretty hard to get a home under contract if you need to sell your house first. A lot of sellers just kind of balk at that, like, oh, well, lots of questions and nervousness surrounding when you need to buy a house, when you need to sell still. So what's a good approach for buying without being contingent? So we'll get into that. So yeah, here we are. What is it? We're in April 2025. So, Ken, take it away.
You bet. So I'm sure you guys are aware of the tumultuous market we've had the last few weeks given the tariff activity. So stocks were down 3,000 points one day, up 1,000 the next. So it's been very volatile. The impact to mortgage rates on that has been a little bit negative, not dramatically. Typically when stocks go down, bonds go up, which help mortgage rates. That didn't happen all the way through this choppy market, but it did mostly. So rates are a hair worse than they were 2 to 3 weeks ago, maybe an eighth of a point in actual rate compared to the last couple of weeks. So not as dramatic as the news makes it.
And that's putting us high sixes into the sevens.
Correct. Some scenarios could be low sevens, some can still be high sixes.
Cool.
And any idea where that's headed?
Well, I'm always guilty of thinking with my heart, so I want to think they're getting better. I do think there could be some more headwinds in the stock market, which could help rates. But now we've got wishing for bad, hoping for good. So
headwinds in the stock market.
I think so.
Give me a definition there. What are you talking about? What do you mean
I think
by headwinds?
I just don't think all of this volatility is over with based on tariffs and trade and all the stuff that's creating.
Okay. So we're in for a little bit more of a rocky road.
I mean, that's my guess.
So generally when we're talking about rates, what are the things we look at? We look at the bond market, we look at unemployment rate, and we look at inflation.
Correct.
Yeah?
And the Fed.
And the
But
okay.
not just
Right.
the Fed.
Okay, right.
You gave all the unusual suspects.
So right, okay, well, yeah.
Left out the one usual suspects.
The main thing, right? Yeah. So where do we stand with what's the outlook? What's the span? I mean, I've heard recession, a recession's coming, but the first quarter's come and gone, right? And I haven't heard that we are officially in a recession.
Right.
But so what are we seeing as far as
there's still lots of talk of the potential recession coming up in the future when you watch the news, and that's pretty much based on jobs.
Okay.
And inflation, and they're saying this tariff impact could have it if it increases the cost of some goods, that could affect the labor market as well. But generally speaking, with the activity we've had the last few weeks, early April bonds were as good as they've been in 2 years, which matched last September, which is where rates were as good as they've been in 2 years. And it happened 2 other times earlier in this 2-year window. So 2 weeks ago, rates were as good as they've been in 2 years, and now we're just slightly off of that. So if we can get any boost in bonds again to kind of get back to that level or better, obviously that'd be great from a consumer standpoint.
What else? Heather, should we move on to Heather?
You bet.
All right. Heather Roda coming up next. Okay, so Heather, I honestly have not been paying super close attention to the market stats in SLO County. I've just been kind of staying the course, doing what I do, whether there's a recession coming or the market's down, I always just kind of try to keep going straight ahead. So for me, my business has remained relatively constant, a little bit slower than normal, but I'm guessing that it's just been kind of some up and downs, some interesting kind of newsy stuff happening, but more or less we're where we were
Yeah.
the last time we did one of these updates?
Yes, yes, but whenever you do want to geek out and have a real estate stat nerd moment, you know to just call your big sister. Right. So yes, stats from residential sales recorded through the California Regional MLS for San Luis Obispo County. Last month we had 212 home sales. So we're still experiencing a lower than quote unquote normal number of closings. Inventory so far this year has creeped down a little bit. We're at 6 months, so we're definitely not into a really strong seller's market, but we haven't creeped into buyer's market either. We're kind of right in the middle. So a lot of middle feelings going on with our market lately. We have seen the median price creep up just a little bit. We're at $925, we were at $915 the month prior, and it still is segments of the market that are doing better than other segments of the market. Starter homes are, flying off the shelves when they're priced right, and those are creeping up, and we still see a little bit more of a struggle with country homes that are a little farther out of town than what some of our city buyers want to drive, the 55 and over neighborhoods, and just the really high-end market as well, which is very similar to what we have reported in other videos. So just catching you up to date that's what's happening, kind of like the rates. I wouldn't call it like, oh, it's just smooth sailing. You made it kind of sound like that for you, so that's good that you're like that duck on the water.
Duck on the water,
but underneath it, like, but if you look at the graph lines, even though we all experience it like that, it just really, there isn't really a huge news flash on stats to report, other than some people do think the sky is falling, and if you're feeling that way or hearing that, the reality is that the median price has actually been creeping up just a little bit.
Okay, so no sky falling. Things have not, we don't have that much interesting information to report here.
Unless you're a real estate nerd like us.
Yeah, there have been some waves here and there though that we have had to navigate. I have been, like Heather says, like if you look underneath, then you're gonna see my feet are paddling like crazy. I work quite a lot, and we deal with a lot of, like, the real estate industry is pretty dynamic, and one of the big things that we have been navigating lately are these new rules for buyers and sellers in real estate regarding commissions. And it's been a lot of like talking and explaining and negotiating, but the bottom line
is that not much has changed. Yeah, I think the biggest thing that has changed, really, that feels very different for our buyers and sellers, is the buyer side signing an agreement with your agent. That is a big new step that people didn't used to have to take. It still kind of comes out in the wash the same financially in almost every situation that we have seen, but buyers are making a decision up front. And we've seen now that this has been in action for a while, that we've run across a lot of buyers that didn't really know what they were signing. So that one word of caution to all the buyers out there: if you click onto that famous website that starts with a Z and doesn't have an A for accuracy, and you want to go see a property and they say, just click these 3 boxes and we can go show you a property, you might be signing up for 3 months of working with an agent that you don't know yet. We've heard that a few times.
And if anybody offers you to just sign it, it's no big deal, it's just an agreement and it's not gonna be anything that's super binding or whatever, like, if someone's not explaining to you the details of what's on that form, red flag.
Yeah, for us, we have found that for most of our clients, a quick conversation, although we're willing to go like fully in depth with anybody, a quick conversation, and then we have created an email summary that gives like the high points that we feel are the most important for you to understand before you sign, and we send that summary out to you before we send the contract. And we attach a PDF so you can read it too. But you want the explanation, right? You don't want just this long document that you got to dig through that half of it's like blah, 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 blah.
The good news is that you only have to sign it once. If you take the time to actually understand what it is, then I don't see any big changes that are going to end up coming along with this thing. It's probably pretty settled for where it is. So take the time to understand the document that you're signing when you're going to a buyer representation agreement. And then every once in a while you're going to have to re-up it, but it should say the same thing every time you sign it.
And then what we're seeing with the actual payment of the commission, that we haven't really seen a change with. The flow of the documentation is different. When sellers sign a listing agreement, they're basically just agreeing to the amount that they're going to pay to their listing agent, and then they're saying that they're open to concessions, which may be helping them with their buyer's agent. Almost every offer that any seller is going to see is the buyer is going to be asking for the seller to cover their agent compensation, and that's what we are typically seeing happen. So almost every time, just like it used to be before, we're seeing that the seller is paying both the listing agent and the buyer's agent. It just is more of a negotiation point that could happen, but usually it doesn't. We usually see the same thing happening as the way that it flowed before. So there's a box on the purchase agreement that the buyer can instruct the buyer's agent to check that says, hey seller, will you help me pay my realtor? That box wasn't there before. Now we check it, and then usually that is what happens. I have had one instance recently where the buyer paid the compensation, and it was already in escrow. The offer was written under what we consider to be like the new normal now, where the buyer asked the seller to pay for the compensation, but then right before we closed, the buyer came along and said, hey, can I pay both realtors, and can we reduce the price by that amount so that I can get a lower property tax basis? I'm surprised we're not seeing that happen more often. It was a cash transaction, so the buyer definitely had the funds. But we had that happen a few years ago on a transaction before any of these new rules came about. So it's not really something new. It's just something I thought we would see that a little bit more often. Right. Now that it's more on the minds of buyers, what the amount is of the compensation. Because that is another new thing, is that buyers are more aware now of what the buyer's agent is being paid. Where in previous transactions, there wasn't ever a document that showed that amount to the buyer, and now the buyer's going to see it several times. And that change is really good. That's probably the only change that really needed to happen, and instead it blew up into this huge lawsuit and all this paperwork and all these new rules and new laws, and as of January 1st, it is actually a law in the state of California. The realtor has to have an agreement with you to show property other than their own listing.
Right, enough of Heather yammering away about buyer and seller representation agreements. So Ken briefly mentioned tariffs, and tariffs have been the big giant thing in the news lately. But so my question is how are tariffs not kind of indirectly affecting the market through the stock market and whatnot, but how are they affecting real estate directly, right? So new construction costs going to go way up and everybody's be paying more for real estate, or is the new construction industry going to collapse? What the heck is going on? Is there any impact at all?
Well, I do think there will be an impact. Everybody's expecting that the cost of goods is going to go up. So if they don't, then it won't have the impact. But if costs of goods go up and building becomes even more expensive than it already is,
impossible.
Then yeah, there are going to be builders that decide not to move forward on projects that they have going and decide not to invest in future projects. And what that will do to real estate is going to be the same old inventory crunch that we had been running into. We saw it because of the cost of goods going up during the pandemic, that some of the construction was stopped, and we need more widgets. We don't have enough houses compared to people, and if you stop building the widgets, then the price of what's existing goes up. And we also will see it, just in one-on-one situation. We have some buyers in town today that are looking at buying a resale or building a house, and we'll see those individual choices not to build a house based on cost. And our inventory will continue to be low because of that.
Yeah. I'm of the mind that if we want to try to help housing costs come down, then there's going to have to be this really significant push for building more houses. I haven't heard of any kind of initiatives coming from the top or anywhere else about
as I heard on a
initiatives.
Zoom this morning, people still like to live indoors.
Yeah. Indeed. Okay, so new construction costs could change. That could kind of shift the market a little bit, but no big major changes.
No, and then the one other thing that we're hearing in conversations with our clients is they're asking us, is the real estate market going to crash because the stock market crashes? Are there going to be buyers that decide not to move forward on a purchase because of the stock market? And my opinion and answer on that is yes, there will be some buyers that decide not to make a move because of the stock market. But before that, there were buyers that decided not to make a move because of the election. And before that, there were buyers that decided not to make a move because of inflation. And before that, there were buyers that decided not to make a move because of the pandemic. And there's just always going to be a segment of buyers that decide not to make a move because of what they're scared of. But what we're actually seeing in the market is just continued activity as normal. We are hearing about certain parts of the U.S. where the real estate market is suffering, prices are coming down a little bit. Here on the Central Coast, we are not seeing that. And we still do have more buyers moving in to the Central Coast than we have moving out without very much construction. So there's really no formula to point to that brings on a crash.
All right, I'm starting to get itchy here. I want to hear about the buy before sell program, because this really does matter. I have clients right now that are trying to buy, and they haven't quite got their house sold yet, and it does just make things just a little bit more stressful for buying a house when you need to sell yours. So it is possible, apparently. I haven't actually had a transaction where we use this program, the buy before sell program. So I'm interested to hear about it.
Well, it's not new, and I've used it a bunch in my career because I think that's a big challenge for consumers that whether you're moving locally or relocating, it's really hard to commit to selling not knowing where you're going to land. Mm-hmm. So we've all seen, we have an offer accepted based on this amount of time to find a replacement property, so I know that exists. But to take all of those obstacles out of it for a buyer to approach a seller without being contingent on the sale, there's a few methods that we use on the regular. So if your home's listed, we can disregard the payment of your current property tax, insurance, as well as the mortgage payment because it's listed for sale, and you're only qualifying for the new house, not qualifying for both. Because traditionally, if you're buying before selling, you have to have the qualifications that give you the income or debt ratio to qualify for both properties. So if we don't have to count the current property against you, obviously that's a big benefit, and then you don't have to make an offer that's contingent on the sale and have the seller cooperate. We also have a product that will do the exact same thing without being listed on the market now, just a letter in the file that, hey, we intend to sell after we move. And you're not paying much of a premium in rate to do it that way. If it's listed, it's one of my best investors from a rate standpoint. They're a little bit more strict on the qualifications. And then in addition to that, if your current home has a lot of equity and you really need that equity for your down payment on the new home, there is a bridge, HELOC, home equity line of credit, second mortgage that will do and still put it on your current house with all the equity, up to 85% of the value of your property, and not count that payment against you because it's going to be sold. So if you need the equity from your current house and you don't qualify for both houses, there's a way to navigate that as well.
I'm hearing lots of upside here.
It also sounds like a huge stress reducer because for those people that have bought and sold at the same time, it is so stressful. So to be able to focus on just purchasing and then selling instead of trying to navigate the whole process together.
So what's the risk though, right? So there's got to be a downside. There's got to be a risk. So what are the downsides? So did I hear you right that there is a little bit of a hike in rate that you're going to pay? And how much?
Well, if your home's currently listed and you meet those qualifications, then that product actually is just competitive from a rate standpoint as any other.
Okay.
If it's not listed and you're just putting a letter in the file that you intend to sell, then you are paying a little bit of a premium in rate to do it that way. But back to the agent side of things.
But will that come down after you sell your house and the rate comes down, or is it
via refinance? As the market provides an opportunity, assuming it does, and that's always what I'm counseling my buyers for in this environment that we're in, where we all think rates are going to get better. We just don't know how fast, right? It was supposed to happen a year ago or more. That once you sell the existing home, if you have more proceeds to do a principal reduction, hopefully the market cooperates for a refinance to present itself at a better rate.
Got it.
You bet. And then back to the stress that Heather mentioned, I think as an agent, you would love for your client to move out and then have the house to stage the way you want, show the way you want, and all of those things. And for that buyer that moved into their new house to not have to deal with showings and all of those things that become cumbersome.
Yeah, I mean, some of our clients have beautiful decor.
Of course.
And they don't have to move pets and
Anything.
kids out of the way and all that stuff, but it still is stressful. The cleaning and just the wondering if you're going to find the right buyer at the right time for your house while you're finding the right house at the right time for yourself. You know, it's a lot. I think the stress is so exponential, it feels more like 10 times the stress when you're buying and selling at the same time instead of just the 2 times the stress of the buy and the sell.
Yeah, and if you're parked around the corner.
It's not 10
times.
2 times.
Yeah.
Well, and you don't
Let's
want
talk to Colin the next time he has to do it and see what he says.
Right, and to have, you know, your kids and dog in the car around the corner while it's being
Yes,
shown is
yeah.
not always super convenient.
Yeah.
No.
Yeah. You really want buyers to be able to come and see your house, right? Like if a buyer doesn't get off work until 5 o'clock at night and you're at home having dinner with your wife and kids and pets, you know, like 6:30 p.m., like, oh, let me clear everything, you know.
Yeah.
It's a
It
pain in
gives
the
you a
neck.
little more negotiating power too.
Sure.
If you are selling without being tied to the timeline of the seller that you're buying from, then you have more negotiating power as a seller. And if you are buying without the contingency for the sale of your property, you have more negotiating power
Absolutely.
as a buyer. So if you can make up a little bit on price on both ends of that, then that would help with a rate hit that you might take.
Lot of upside. I'm sold. I don't know about you.
I do think the buy before sell is one of the
Awesome.
biggest topics that I see on a regular basis.
Yeah.
The other thing that's really become very kind of front burner now is what I call a portfolio product. The industry will call it non-QM, which means, hey, I'm self-employed, my tax returns aren't the greatest indicator of my income because I try to claim everything I possibly can. So we'll do a bank statement loan where we show 12 or 24 months business bank statements to qualify. And again, you're paying a little bit of a premium in rate, but not dramatically. Another very common one for somebody super well qualified, I had this happen recently, is an asset-based loan where I don't have traditional income, I have, you know, great brokerage account, etc. And we're using that to qualify, and that's all we're documenting. Mm-hmm. And then the third category would be DSCR, which is an investment property where the rent for the house that you're buying will cover the payment or a certain percentage of it. Then that's all the documentation needed as well.
And the asset-based one, if anybody's watching and like grandma or grandpa has said, because it's usually retirees, right? Like,
Yep.
oh, I want to buy a house, but I don't have any income
Right.
to qualify, and they're not watching this video because they're not on YouTube, then this is the information that they need from Ken.
That's right.
They can use their assets as their income.
And I will plug my own company on this because we were the #1 lender in that space last year. We are also the #1 lender generally for retail. But in that specific space, those 3 products I just mentioned, we were #1, and it's our portfolio product that we wrote the guidelines are, so there's no other investors to sign off on it. 40% of what we did last year was on exception, meaning, hey, the credit score wasn't quite there, but we did it anyway based on compensating factors. The big down payment wasn't big enough, debt ratio was a little high, all of those things. Almost half of what we did was on an exception.
Awesome.
Just based on old-fashioned make sense lending, believe it or not.
All right, let's wrap this thing up.
Were you getting tired of listening to Ken? Because you're always getting tired of listening to me. You always
That's
seem like
fair.
you just want Ken to keep on talking.
And Niche. So we're going to wrap this up. Ken,
Yes.
your best piece of advice for buyers in the real estate market right now.
Buffett, like be greedy when others are fearful and fearful when others are greedy. So as people go on the sidelines, because we know there's more buyers than sellers and people are nervous because of the market, I think it's going to be an opportunity. I don't think prices will get better. I think rates will get better. So I would say make it property specific, but don't get on the sidelines because of what you're seeing in the news.
Okay, Heather, your turn. But for sellers this time, what is your #1 piece of advice for
Okay,
sellers?
yeah, but full disclosure, Colin had to like pause the film and Ken had to help me with this one. But he was right. So it's listen to your agent. And I was stumped because every seller's goals are so different. It's hard for me to come up with what the best advice is for all sellers. But yeah, listen to find an agent that you trust And then hopefully, you know, the type of realtor and lender that we want to be is not just like standard advice across the board for everything, and none of us are that way. We want to be in the thick of your real estate adventure and your go-to people to come to for advice, and we're going to give you advice based on what we think will help you in the long term. We want you to be clients of ours for life. We want you to be so happy with us that you tell all your family and friends about us. So we're not going to just give you like self-serving advice, and we are going to tailor it to your needs.
So find someone who can help you make objective, smart decisions.
Yes.
And listen to them. Okay, and my advice for buyers is to try not to be too picky, be prepared, and then negotiate. Make sellers negotiate a little bit right now. Don't just give them the price that they want, and don't just give them the terms that they want. It's still not a super strong buyer's market, or it's still considered a seller's market, but we have been leaning a little bit more towards a buyer's market. So, you know.
But also there are those occasional listings where it is more like listen to your agent because there's 4 offers and you're going to have to give them the price.
Yes.
But then
yeah.
Colin will still come in with, okay, now that we're in escrow, let's negotiate with the seller during escrow, which we weren't doing for a little while.
So recognize that houses that are beautiful, upgraded, priced right, and marketed well are going to sell very quickly for the market price or maybe slightly above. But for anything that doesn't meet all those standards, if you're willing to compromise a little bit on what you're getting, let's fight a little bit.
Love it.
I like it.
All right, so we'll get together in another 3 months
You bet.
and talk again. Thanks, guys.
Fantastic.
Or sooner if there's like really big news.
See you next time.
Thanks
Bye.
so much.